Cryptocurrencies, Digital Dollars, and the Future of Money, a backgrounder by Anshu Siripurapu and Noah Berman for the Council on Foreign Relations. In the span of a few years, cryptocurrencies have grown from digital novelties to trillion-dollar technologies with the potential to disrupt the global financial system. Bitcoin and hundreds of other cryptocurrencies are increasingly held as investments and used as currencies to buy a swath of goods and services, such as software, digital real estate, and illegal drugs. Cryptocurrency users send funds between digital wallet addresses. These transactions are then recorded into a sequence of numbers known as a block, and confirmed across the network. Blockchains do not record real names or physical addresses, only the transfers between digital wallets, and thus confer a degree of anonymity on users. Bitcoin miners earn coins by organizing these blocks, thereby validating transactions on the network. The process requires a system known as proof of work, based on using computers to solve math problems. Many cryptocurrencies use this method, but Ethereum and some others instead use a validation mechanism known as proof of stake. In Bitcoin's case, a transaction block is added to the chain every 10 minutes, at which point new Bitcoin is awarded. The total supply of Bitcoin is capped at 21 million coins, but not all cryptocurrencies have such a constraint. The prices of Bitcoin and many other cryptocurrencies vary based on global supply and demand. However, the values of some cryptocurrencies are fixed because they are backed by other assets, thus earning them the name, stablecoins. Why are they popular? Once dismissed as a fringe interest of tech evangelists, cryptocurrencies, particularly Bitcoin, have skyrocketed to mainstream popularity and trillion-dollar valuations. In November 2021, the price of Bitcoin surged to more than $60,000 for the first time. By February 2023, it had fallen to $23,000. As of mid-2022, an estimated 20% of U.S. adults polled by NBC News had invested in, traded, or used cryptocurrency. Different currencies have different appeals, but the popularity of cryptocurrencies largely stems from their decentralized nature. They can be transferred relatively quickly and anonymously, even across borders, without the need for a bank that could block the transaction or charge a fee. Some experts say that digital assets are primarily tools for investment. People buy cryptocurrencies because of a speculative belief that these tokens are going to go up in the future, because a new future is being built on a blockchain, says CFR Senior Fellow Sebastian Malaby. Many investors see Bitcoin as a speculative asset to hold over time, rather than make payments with, and it often draws comparisons to gold. Some see Bitcoin as a hedge against inflation because the supply is permanently fixed, unlike those of fiat currencies, which central banks can expand indefinitely. However, after Bitcoin plummeted amid stock market volatility in 2022, many experts questioned this argument. In countries with historically weak currencies, including several Latin American and African countries, Bitcoin has become popular with populist leaders. In 2021, El Salvador made waves by becoming the first country to make Bitcoin legal tender. Residents can pay taxes and settle debts with it, though the move has sparked protests. Stablecoins, meanwhile, have the potential to rival fiat currencies as the dominant form of payments, experts say. Their value is relatively stable, and they can be sent instantly without the transaction fees associated with credit cards or international remittance services such as Western Union. In addition, because stablecoins can be used by anyone with a smartphone, they represent an opportunity to bring millions of people who lack traditional bank accounts into the financial system. What is DeFi? Cryptocurrencies and blockchains have given rise to a new constellation of decentralized finance, or DeFi businesses and projects. Essentially the cryptocurrency version of Wall Street, DeFi aims to offer people access to financial services, borrowing, lending, and trading, without the need for legacy institutions such as banks and brokerages, which often take large commissions and other fees. Instead, smart contracts automatically execute transactions when certain conditions are met. DeFi is surging in popularity, with investors pouring tens of billions of dollars into the sector. Most DeFi apps are built on the Ethereum blockchain. Because of its usefulness in tracking transactions, Blockchain technology has a range of potential applications beyond cryptocurrency, experts say, such as facilitating real estate deals and international trade, PDF. You can imagine a new kind of financial system being constructed out of blockchain-based tokens that have advantages over the old, centralized kinds of money. You trust the code, and you trust the blockchain and the decentralized ledger, and it's a new way of organizing finance, says CFR's Malaby. This would give governments powerful new ways of managing the economy. Stimulus payments and other benefits could be credited to people directly, for example, and the central bank's imprimatur would make CBDCs a safe digital asset to hold.